Hey everyone, welcome back to Chill Deal Trades, where I analyze stocks so you know what's going on. Today we're going to be covering Skillz, which is SKLZ. It moved pretty big today, about 17%. I think it's up 5% after hours, so we're going to dive in, figure out if the price can go any higher in the short term, as well as break down some of the financials, give you some of my thoughts, and I think the pros and cons of the business. If you're here and you haven't hit the sub button yet, go ahead and do that and join the squad. We're growing. We're almost to 500 subs. Please help the channel get there. That's be a really exciting point for the community. And I really want to know in the comments what you think of the company. So please share that with me. But let's dive into things. So first thing I want to do is just for anyone, if you're not quite sure what Skillz is, maybe you're hearing about it the first time because it moved big today. Skillz, it's basically a leading mobile game platform that connects players in fair, fun, and meaningful competition. It's kind of funny how they put it on the website. But they kind of host casual esports tournaments for thousands of people and distribute millions of prizes each month. And to give you a little bit of insight on, the games that they have, here are some that listed. So mobile games, some of them are like gambling games, kind of more fun, like they kind of said, fun, lighthearted games that you can play with people, tournaments, such. So very interesting. And some of the, the kind of their user base. So 30 million players, 30K game developers, 5 million daily tournaments, which is insane, and 100 monthly prizes. So, you play and you can win. And I think that's what's so intriguing about their platform for, I think, a lot of people. But let's go ahead and dive into kind of the stock and the finances really quickly. So, as I just said, they're up about, I said 17%, but I guess 11% and then 6% after hours. And really the main reason I think is obviously they have a big backing. We saw some other, SPAC type names move today like Virgin Galactic and some others, but really it's a bit high short interest. So it's getting a lot of talk on Reddit right now, and they're trying to squeeze these shorts to about 23%. So what I would say is that's not a crazy high short, at least what we're seeing here. Really to see, I would say, an extended short squeeze, we really need 40% or more. Typically something's around 20%, still a high number, but we'll have to see if we get follow day throughs tomorrow. We might get one more day of follow through, and I really have to see after that. But that's, I think, the main reason it's moving higher today is that short squeeze. Obviously they've come down quite a bit if we really look at this chart, like most of these SPACs and who reverse merged and selling off pretty significantly. And let's just look at the finances real quick, and then we'll dive into, I would say, more detailed finance. So, they released their earnings, this last one for June, and, again, we're seeing really good growth. So, we look quarter over quarter, 50%, or year over year, sorry, 90%, 90%, 90%. So they slow down a little bit. So we'll have to see, coming into the third quarter, now that's post-pandemic, people are going back to work, unemployment benefits are ending. Can they continue to accelerate revenue by people signing up and spending more on their platform? I think that's going to be the biggest thing for me personally. There's a lot of things changing, I think, in 2021. Obviously, we're still dealing with COVID, but like I mentioned, unemployment benefits are ending, which is going to force people back into finding jobs. There's a lot of forbearances that are coming off. So a lot of government support is kind of leaving people's pockets, and a company like Skillz is something that you pay for or that you use when you have extra free time. And I think as people's lives get more busy, with some financial support coming from the government, as that ends, I think people are going to get more busy. They're going to be working more, which might impact this company a little bit. I think that's part of the reason we're seeing a little bit of slow here. So I think for this company to continue, I think to move with their valuation, we're really going to want to see 50% plus year over year moving forward. It's going to need to keep that range of growth. If it can't and it starts getting into the 20 to 40% range, so closer to 20, then I'm going to start waving my red flag a little bit. And the main reason I'm saying that is they're spending a ton of money. So really they're spending a lot of money to grow revenue. When we come here, this is from their last quarter, it's a Seeking Out our article, growing advertising spending steepen losses. So when we see here 99 versus 52 year over year, so when we see this big increase in losses, it's mostly due to advertising spend. And so I think a lot of the time we see great growth in these companies, which is great, but when they have to pay for the growth, and maybe that growth needs to stick around to keep making money in the future, but if they have to keep growing their advertising expenses to grow their revenue, that's kind of a red flag sometimes. So we really want to keep an eye on that to see if that continues to accelerate in terms of net losses from advertising spend. On the flip side, I think I would say a positive here, a reason their revenue was up is we're still seeing a 52% year-over-year increase in monthly users, active users. So that's a big positive. Obviously, the advertising spend is paying off and they're getting people to the platform to spend money, which is giving them revenue. So that's a pro. So there's three things I want to pay attention to. Are we going to, next quarter, will we see 50% at least or higher? That's a really big positive. The second thing is net income. As this revenue continues to increase, is this continue to increase substantially? I know they're making some acquisitions and things, so that could hurt their some of their net income in the short term, but long term will be beneficial. But in terms of advertising and such, we really want to pay attention to if advertising spend outpaces revenue growth. And then thirdly, I want to look at cash on hand. So if they continue to burn, $78 million a quarter, what would that be annually? This was 2020, but we're already going to break that. Say that they burn $500,000. This is $500,000 in cash, so they're going to have to raise money somehow, whether it's diluting shares, bringing in more investors, selling off part of the company, whatever it might be. Those are the three metrics that I'm really going to want to pay attention to. There are some pros, I would say, to their business. I think the biggest pro is their gross margin. So when we look at their gross margin, they're at 93 to 95% pretty consistently, which is a really big pro. That means, when they acquire someone as a customer, there's not much cost of goods sold between there. And obviously they're an online platform, so most of their costs come through the staff they pay and advertising. But this is really good, seeing 94%, because that means they can continue to continue to spend more on advertising. They can continue to hire great staff to grow the business. They can make acquisitions. Having such gross margins is a really big positive in that regard. So that's, I would say, one of the biggest pros, kind of accompanied with some of what I am going to be paying attention to on their balance sheet. So it's just some things to pay attention to. We already mentioned short interest. This is high. We're going to have to continue to see over the next couple days if we're seeing that increase or decrease. So this is a site I like to use, shortsqueeze.com. So short interest, percentage increase, decrease. The next couple days, I'm going to see how this changes. So we saw an increase in short. As it's getting squeezed, are we seeing that number come down significantly? Do we see it go from 23 to 10 to 15%? It's going to be harder to continue to squeeze that stock higher. So those are some things we want to pay attention to. And the last thing I want to look at is just institutional buying. I always look at this to see, what are the big dogs doing? And so we do have a decent amount of buying this quarter, which is a really big pro. I will also say that I think some of this buying is definitely averaging down. When we look at some of their players, we know ARK has been an investor for a while. They're definitely averaging down. Morgan Stanley, lowered their position. Here's some averaging down from BlackRock. Here's averaging down. So there's a lot of averaging down. So there's people in the long term here. And that's what I'd really call it about this stock is it's either that you're playing a short squeeze like we're seeing right now, or this is something that you are wanting to hold on for the years to come. Their valuation is pretty high. Let's go to that real quick, actually. So, they make about a couple $100 million a year in revenue. What are they at right now? They're at about $500 million in revenue. They're at a $5 billion valuation, so 10, 15 times revenue, which is pretty high. I'd like to see that a little bit lower. Obviously, forward guidance, that number is a little bit lower, but that's still a little bit rich. And so you see, that's why I'm mentioning it's going to be a long-term hold if you really believe in the company. And just like these big companies are doing, like ARK, BlackRock, these are people that are also averaging down. So it's going to be a long-term hold. On the pro side, when we do look at the date, we are seeing a lot of new positions. So we're not seeing any change, which means this is a new position, new position, new position, and they're decent sizes. Some of them, 64 million new position, 13 million new position. That's added 133 million new positions. So those are really big pros. We're seeing averaging down and new positions, which obviously is a really good sign for the company long term. Next thing I want to take a peek at is just the charts, figure out how they're looking. So the first thing we want to look at is we have this long downward trend line that we hit here, and we're getting squeezed above it right now. After hours we're at 12 something, so when we zoom in, we're about at this really important resistance point. This kind of 1350 to 1250 is pretty big resistance. So we have the top of the Bollinger Band, which is about the 100-day, or sorry, the 50-day, around that. So that's going to be a pretty big resistance, and that's where we're hitting right now. So tomorrow we're really going to see if this can continue and break above that kind of 350, which is another big resistance point. You know, when we come back, this kind of range right here is really significant, and so we'll have to see if we can break above that or not. But we were oversold for a long time, so you know, we're getting a little bit of relief support out of that. You know, in order for this for the bearish trend to end, you know, we really are going to need to see RSI get above 50. You know, if you're talking about long-term play, in terms of a reversal and a move to the upside in the long term, you know, start to reverse, because we're coming up to the 50 on the daily. But what we're going to want to see is it hit this, maybe come back a little bit to cool off, and then move above it and then bounce off it again. And if we see something like that, then that's going to be a bullish reversal to the upside in terms of long-term perspective. For MACD, we are seeing a bit of positivity here, so we do see a flip, but we're still negative, so positive momentum, but it's still negative overall. Now I want to bring up the 100-day because we're going to use the 100-day as something to keep track of as maybe a potential squeeze point. So 100-day on the daily, we're pretty far away, which is I would say a good sign, because that means if we do continue a squeeze, this thing can get squeezed pretty significantly higher, and that's all the way at 16 bucks. So the next couple of days are going to tell us a lot. Break above 1270 around the 50-day, as well as 1340, which is above this past low zone. And if we can break back above this and hold this, so if we kind of go like this, maybe even if we hang out here, that's super bullish, because what we said is we saw a break below past low. It got oversold when it really shouldn't have. You know, I think this was earnings back here, so people didn't like earnings, kind of what we reviewed in the numbers. They didn't like how that looked. But if we can get back above there and hang out here, that's super bullish, as this was an amazing buy opportunity zone, and it's going to stay above the at least 13 range for a while moving forward. Let's go ahead on the shorter time frame to see some price points. So again, we're breaking above the 20-day, which is this orange line, squeezing higher. And on the 4-hour, we have the 100-day somewhat around this zone right here. So this is going to be a really important place the next 2 days. 1390 to 1260. We really have to break out of the zone to show any more upside. And as I mentioned on the daily, we have a ways away from the 100-day there. And I believe the 200-day is going to be above that, but let's double check. Oh yeah, 200-day is about at the same place. So that 16 could be a place if we get a big squeeze, but that's if we get a big squeeze. On the hourly chart, we are seeing RSI over bot. Let's go to the 4-hour real quick. See RSI. So RSI is above 50, which is a pro. You know, tomorrow I'd like it to cool off and maybe jump higher. That could show some bullish momentum to maybe get up to that 16 point. On the hourly, we are above the 100-day, which is a pro. Let's see where the 200-day is. I'm going to assume we're above the 200-day as well. Oh, we're coming up to 200-day. So we're testing the 200-day right now after hours, you know, on the hourly. And then we have this zone here. So, you know, we're seeing a lot of resistance pointing to this 1350 to 1230 range. And that's going to be really important because we have a lot of positive indicators, but then we have some things showing that we have resistance coming up. So next 2 days, that's really what I'm going to be looking for, I would say, across the board. You know, if we do manage to break above that, you know, the next area of really important resistance, again, around that 16, well, let's do this real quick. I didn't do all the lines on the chart. So 1480 is the next above that, and then from 1480, it's basically around that $16 mark. So those are kind of the price points I'm going to be looking for. Those are going to be areas of significant resistance, and see if we can break above. But that's all I have for you guys today. Please let me know what you think of the stock. I'm really curious on your end and where you think it's headed. But thanks for coming in and stopping by the video. If you watched the whole video, I really appreciate it. It means a lot. Please like, please sub, and tell me what you think. Appreciate it, guys. Talk to you later.